And we're back, episode 3. Chandler, how are you doing?
Yeah, doing very well, thanks. Today's actually quite a special day for me. It's my birthday.
Happy birthday, Chandler. We've got 2 birthdays on the Astaria team today, which is exciting. But we have a lot to cover, so we should jump into it. Before we do that, I do want to share my screen here. We had an awesome offsite last week for the Astaria team. So me, Chandler, 6 other folks were in Scottsdale, Arizona. You can see we had some funky Vitalik hats. We did a little bit of Top Golf. Great time. We don't have too many golfers on the team, but we had fun. We did our best. Went on a little hike. We had a dog injury, unfortunately, on the hike, but things are okay now and everyone's happy. It was refreshing to get everyone outside. And then we did the most fun thing, in my opinion, that we did. We went on a hot air balloon ride. So we had the whole team in one wicker basket. We woke up at like 4 a.m. in Arizona, drove to this location, and yeah, we had a great time. You can see that's most of the team there, and did the balloon ride for about an hour. It was awesome.
Yeah, Justin, just to be very clear, it wasn't your dog that had an injury, one of the other teams. So
Yes.
for any of the eagle-eyed viewers, you'll see Justin's dog chilling in the background of his view, really stealing the show more than anything. He's perfectly fine. He was very happy and content at 0 feet above sea level for most of the time. But yeah, this offsite was amazing. We got to bond with the team. We got to spend a lot of time working together on a launch. So not going to leak too much alpha there, but we are a lot closer than we expected, and that's very, very exciting. So the Astaria team is riding high after that offsite, and that was no pun intended.
Yeah. Shall we jump into things? I think we wanted to talk about the Arbitrum governance debacle first. So I'll let you kick things off, Chandler.
Yeah, so for anyone that really had the airdrop, whether you dumped it or not or held on, the very quick thing that happened soon after this was that the Arbitrum governance team put forward a proposal that was more of a ratification, in their words, that gave the Arbitrum Foundation quite close to $1 billion worth of the token for keeping. Now, the very kind of knee-jerk reaction that we saw on Twitter was that this was for the team, and that was not actually the case. The Arbitrum Foundation and the Arbitrum team are 2 separate entities, and so the Arbitrum Foundation is what will hold those Arbitrum tokens and be dispersed at later points in time, and this will be voted on by governance. So somewhat slightly different to the concept of it being given to the Off-Chain Labs team, which is the team that actually built the Arbitrum ecosystem. So in totality, I think that this is like a prime example of a little bit of miscommunication being blown up. But on the other side, and I think this is actually even more justifiable, it's what's the point of governance if the ratification, which will most likely not pass, actually goes through anyway. For anyone that didn't actually know, that the Arbitrum team already did the transfer and then put up a governance vote saying that they were doing it. And so there was actually no need for a vote. It was just simply, hey, we did this. And so, people in the Arbitrum ecosystem naturally were a little bit upset by that. And what we're seeing is quite a vocal rejection of that concept around Arbitrum governance having any credibility. And it's kind of sad because the Arbitrum team have been some of the most professional people in the industry and one of the most professional L2s. And so I'm personally quite sad about that, especially because most of the people that got airdropped, it was free money, and now they have some sort of entitlement around the whole concept. And so there's this, airdrop farming entitlement. There's the lack of credibility that the Arbitrum team, rightly so, have kind of put in place ever since they've just kind of done this concept without even having a vote. And then the whole idea of having the foundation being a separate entity, being all kind of, have blown up in this issue, and the whole concept of DAOs is being put into question. So it's been a fascinating time for the Arbitrum team. They've gone from quite literal highs to now lows, and so I think it's proof that even the best of teams can mess things up.
Yeah, it's been interesting. I mean, I have a lot of feelings very similar to yours. First of all, I think it was certainly a faux pas, right? If they had just did this before, no one would have blinked and like batted an eye. No one would have cared. It would have been expected and normal. It is a little weird that they put up a proposal and just sort of like expecting for it to pass. But that said, like I do think the best use of these tokens is probably to have them in the foundation, right? I mean, the foundation I think dropped, was it 10 or 20 million dollars worth of tokens of the maybe $1 billion they were granted from this proposal. I think since then the tokens have actually been sent back to the Arbitrum treasury, or I'm not sure how they make the distinction there, but I think the tokens were sent back except for everything they've already spent, and they're going to work together with the DAO to see how best to distribute the tokens. I think this is probably like a net negative outcome for Arbitrum. I think it's like probably one of the best ways to spend the token is on the foundation. If you believe the foundation will do good and meaningful work, which I think, that's their goal. I don't think any of us are upset that the Ethereum Foundation has some, small amount of Ethereum that is worth quite a bit now. I think that's some of the most useful, way we can spend, or they can spend these funds. But I also, agree with you about the entitlement factor. Like for me and for most people, they just were gifted thousands of dollars plus of Arbitrum tokens for just using the chain. If you bought the token, it's obviously a different story. But yeah, I mean, it's who knows if the price is down because it's down for whatever reasons, because people are selling or because of this proposal. But you can see the tokens trading at about $1.21. So that $1.40 sale of Arbitrum tokens that I said I made a couple weeks ago, or whenever I got the tokens, is looking pretty good. You're still holding, right, Chandler?
Yeah, I'm still holding. I forgot to sell, and I'll continue to forget to sell.
Yeah, it's I was just talking about this on another podcast, if I think the Arbitrum token is a good value or not. We talked a little bit about this before. I love Arbitrum. We both do. Sequencer revenue is pretty minimal, and it's expected to continue to be minimal, at least by me. And so I don't know like what the fundamentals are here. There's certainly some governance value, some mimetic value. Is that worth a 12 billion FTV? I don't know, but I'm pretty risk adverse, so sticking with Ethereum for now.
All right. What I think I would add to that, Justin, is simply that when Ethereum and Bitcoin and all the other coins started in the beginning, it was the economics of running a node, running a miner was also somewhat unknown in those beginning days. The value of those tokens was relatively low. I feel like we're at the same stage now with L2s and their sequences, and there's a lot of work that needs to go into sequences for them to become decentralized, for them to become kind of net revenue positive, that the incentives align. And I think that's kind of one of the cutting edge research points that the whole industry is in. So I think the concept of where the value gets accrued to is somewhat unknown now. And this is kind of where I truly believe some people actually, can make it big or not make it big, depending on how the evolution of what it means to run an L2 evolves. And I think, some of the smartest minds are actually thinking about that right now.
I think you're right. Yeah, that's probably a better way to think about things. I mean, I think Arbitrum is still richly valued, but we don't know what's to come. Like it's possible instead of ETH on Arbitrum that ARB is the liquidity sync token, right? That everything's paired with ARB. That's a huge value add, right? Like that's one of the reasons that Ethereum is money, right? And it, drives value by locking it up. And everyone's trading through it. So who knows? That could be it. Arbitrum could play a greater role in the ecosystem. So I think you're right. I think you're definitely, if you're playing the long game, I think you're probably pretty smart there. But for me, I can't handle the volatility. But I think you're right. I mean, we'll see. There's a lot of competition, but who knows? Cool. So next up for a topic, we wanted to talk about LSDs, withdrawals, ETH staking, etc. So what is it? The 12th? On the 12th or the 13th, withdrawals are going to be enabled. So that's just a week away, basically. And this is a big change for Ethereum. It's an awesome upgrade. It's much needed. It's very long awaited. You can see right now that only 15% of the Ethereum supply is staked. And it's anticipated that number, once withdrawals are live, will drastically increase. We're already seeing, you can see here how much ETH is deposited. It's just up and to the right. And I think this is just going to continue, but at a much higher pace. And I think this has a lot of implications that we should talk through about LSDs, the LSD governance tokens like LIDO, StakeWise, Rocket Pool, their value accrual mechanics, etc. and then also what the yields for ETH will be. So let's start with ETH yields, right? So you can see here that 15% of the supply of Ethereum is currently staked. Now, if you look at, I know this is sort of a silly example, but if you look at Cardano, about 70% of all Cardano is staked. Now, I don't think Ethereum is going to get that high because Ethereum is actually used in contracts on DeFi, etc., and there's real utility there. But you could imagine if we get to 60% staked or 50% staked, what that's going to do to ETH yields. So although the more people stake, when more people stake ETH, more ETH is emitted to stakers, the yield will still go down. So it's expected that the roughly 4.5% yield that we're seeing now for ETH staking will decrease to maybe 1 to 2% over the next few years. So for me, that's like a pretty big decrease in the staking yield. And I also think it's a little bit bearish, the LSD tokens, who have this other headwind of once withdrawals are live, there's really no moat there, right? So you're just going to go to the staker that presumably offers the lowest fees. Obviously, there are some people that are very mindful of decentralization. Maybe they want to solo stake or stake with Rocket Pool. But for the vast majority of people, they're just chasing yield. And that means that these staking providers have to drop down. So Coinbase charges 25%. I think that has to come down drastically. LIDO charges 10. That has to come down. Rocket Pool is about 15. I think that's going to come down as well. This is really a commodities business. I don't know where the moat is. I don't know where the value is going to be, especially when the security assumptions are you have to be a little less rigid about them once withdrawals are live. So you can feel more comfortable using newer staking products that are going to be competing on price. I know I threw a ton at you, Chandler, but yeah, what are your thoughts on that mouthful?
Yeah, you've got a very interesting thesis point there, and I think there are two big events that are happening simultaneously for this answer to be somewhat kind of fuzzy at the moment. Firstly, there is the withdrawal period. What I think people are overestimating is that they assume that all withdrawals will immediately happen at once. No, there is still going to be that queue, and so it's going to be a drip out more than anything. And so you're going to see kind of the forces at play on, like, where do we find the equilibrium of how much ETH is going to be staked at any one given point in time. And I think you're totally right by saying that, we're going to naturally in the ETH ecosystem have far less ETH that's staked as opposed to Cardano, simply because ETH is just a lot more useful. It's useful in DeFi. It's useful as just the protocol payment. It's useful as kind of like just the ultrasound money meme and thesis that you have like in that space. So realistically, I think that ETH will always remain relatively lower in the staked amount. And during that withdrawal period, I think we're going to see a lot less than what people anticipate. And kind of my thesis point around this is that most of the people that are in the Beacon chain were there for a long time. These kind of folks set up their own validators well before LSDs were around, and a lot of that ETH is going to stay there relatively kind of, they're going to be sticky relatively after the withdrawal. And I'd expect at least some of the yields to come out so people can take some profits, but ultimately those validators will stay there. And I don't foresee that being too much of a case. Whereas in the LSD side, I think because it's naturally more fungible and liquid, we're going to find a lot more of a competitive market. And I think that LSD's value propositions become a little bit more cutthroat, meaning that all the LSD providers realistically have to start competing on features and kind of quality of life use cases. And we're seeing kind of the shift from, LIDO was king for a while, then Rocket Pool kind of emerged as the true version of decentralization. And there was kind of that, to and fro between the communities. And we're seeing some of the other ecosystem partners also kind of like have their reasons to use them. I know you're a big fan of Coinbase's staking services personally. So, I mean, we all choose what we were kind of more interested in. And so those will become a lot more important for people that don't necessarily want to spin up their own node, but have exposure to that kind of, Beacon chain and the staked side of the ecosystem. And I'm personally thinking that the withdrawal period will be a lot less dramatic than people expect. With withdrawals, a natural kind of sharp decrease in the beginning, and then kind of we'll find this equilibrium where the steady state of whatever is staked in the ecosystem will kind of remain relative, bar a few basis points.
So it's funny. I totally disagree, actually. So I think there's going to be a lot of shuffling, right? So let Coinbase stake ETH, like let's just take that alone. That's at a 1.5% discount that LSD is trading at. That means that people basically have to arb that, right? So your people are going to be withdrawing as fast as they can through Coinbase's stake ETH product just to get out. In addition, LIDO is not, they're not going to have withdrawals for, I think, a month or so after withdrawals are turned on. They have to like finish auditing and preparing their contracts. So there's going to be a rush to get out there. LIDO stake ETH is trading at, I think, a 0.25, 0.3% discount. So people are going to rush to get out. And I think, here we go. I'll share this here. I think that's going to create like a little bit of a pandemonium here of everyone trying to race to get out, because if you can get out quick enough, you're going to make more money, right? Like you're going to be able to buy these LSDs that are a discount. You're going to be able to and sell them for, the full Ether price. So, to your point, if you're a solo staker, you have to go through this withdrawal queue. And I think it's like there are going to be people that want to leave. I think it's much less than some people are predicting, but at the end of the day, this is like net new sell pressure, right? There's just no way to get around that. There is ETH that was locked up that doesn't want to be locked up anymore, and it's going to have to come out. When you factor that in with the LSDs that are trading at a discount, I think we're going to see like quite a long exit queue. I think people are going to freak out. And this is just a guess. I'm obviously not trading on it. I'm just holding my ETH long term. But my hunch is that ETH is going, this will have net negative price pressure. I mean, what are your thoughts there?
I actually want to throw it back to you and say, let's make a prediction. What do you think the actual price impact will be?
I think if the exit queue, if like on day one in like the first week, the exit queue gets blown out to like 6 months long, and like everyone's like, oh my God, a million ethers coming out to get sold, which I will agree. I don't think all of that ETH is going to get sold. I think it's going to be a great reshuffling, but it's not going to look good. So I could see easily at like a 10% price drop. I mean, who knows? I'm not trading on it. I'm not a trader, but I wouldn't be surprised if it was a 10% or so price drop. I would also add that like everything in crypto is sell the news. Like the merge happened, the most bullish event in Ethereum's history, and it was sell the news. And even though it had like massive issuance reduction, energy efficiency, it was just a great technological achievement, and it was still sell the news. So this is like a, at best, slightly bearish, at best neutral, at worst bearish event, and it's going to be sell the news, and you have this like massive exit queue. So I wouldn't be surprised to see a 10% drop. I don't think that's, going to be a long-term thing, but in the short term, I could totally imagine it. So I'm locking in 10%. What do you think?
10%. I think in the low case, 2%. In the realistic case, roughly around 4 to 5. And I will be happy to lose this bet if we don't go above 7%. Or the price is not
even a
below.
drop. I mean, 2% is like Tuesday for Ethereum,
Exactly. And so like, my statement of 2% realistically means that price predictions, I think aren't going to be a factor. And realistically, it's because of exactly what you said. The merge happened. Nothing really happened to the price. It was slightly, I didn't think the price even moved 10% that day. And so I'm of the same opinion on withdrawals.
The one thing I would say about the merge is who knows, you never know if this stuff's correlated or if it's just random price action, but Ethereum went to like $2,000 right before the merge. People were saying, it felt like there was like this merge hype narrative. We were reading articles about it. And then I think when the merge happened, and leading up to the merge, the price maybe dropped to 1,300. Obviously some craziness happened in the crypto space that contributed to that. But, perhaps this like run up that we just saw to 1,900 is like in anticipation of that. And maybe the fair price for ETH is lower. There'll be some sort of sell-off that brings us back down to where we've been at for the past few months.
We shall wait and see.
And not too long. So we're actually thinking of live streaming withdrawals getting turned on if it's at a friendly time for us. So if you're interested in watching that live stream, leave a comment below and we'll make sure to actually make it happen. I think it could be really fun to watch the exit queue live. And we can have a better time than, the official Ethereum Foundation streams that are very serious and whatnot. We can have a good time and joke around and not take things too seriously.
There may or may not be a glass of wine, even if it's 10 a.m.
So the next topic we wanted to cover is a bit uncrypto, but Let's see if we can make it crypto. I've been reading a lot about this Apple VR AR headset. It looks like it's finally happening now. It's been rumored for like 3, 4, or 5 years, but it looks like the headset is rumored to be coming out on June 5th, which is only a few months away, and for me is exciting. I am a glasses wearer, and while this obviously won't be, traditional glasses that have AR capabilities, it'll be more of a headset. For me, this is something that's extremely exciting. And I think it's also applicable to crypto with all of this metaverse talk. So obviously, Meta, Facebook's been building out their Oculus product, but no one does hardware better than Apple. No one's been able to compete with Apple on hardware. I think AirPods are seen as the best headphone. iPhone is the best hardware for phones. You can't compete with MacBooks. So I think Apple is really going to be a leap forward here. And I think the possibility for crypto, but more importantly, just tech is pretty enormous here. So I'm like looking at and trying to follow what use cases like we could use this headset for. I think there's going to be a lot of work from home applications. It seems like Apple's very focused on how people are going to be interfacing and connecting with each other. So they're very focused on this device as like a connection device, similar to how Facebook views it. And I think it's going to really shape how we work from home. From what I've read, there's some rumors that even though you'll be wearing this device, this is obviously just a concept render, but even though you're going to be wearing a device on your face, if you were to like Zoom or do a video call with a colleague, they would still be able to see an image of your full face and you would see a full image of their face. So I think there's going to be some really cool applications. What are your thoughts, Chandler? Any tie-ins to the crypto space?
Yeah, I mean, the whole like metaverse shift that's happened has realistically not happened. And it, the kind of like renditions that we have of any sort of metaverse area is not even worth anyone's time at the moment. And I think there are some sort of grassroots elements of what's working and what's not working. And I think those will become really important like features that will be kind of dovetailed into the next series of metaverse applications. And if there's anything that Apple is known for, it's seeing a market, knowing its potential, waiting on the sidelines, and then coming in with like a revolutionary product. And I ironically don't even think that this will be the first product that will do well. Look at their watch, the very first Apple Watch that happened, it was okay. Then like Series 2 was like, it was better, and then Series 3 realistically is where it became a really good product that kind of anyone can use it. And you and I both are wearing one right now. We both like it, and it's right now realistically the top of the smartwatch game. And so I fully expect Apple to take that trajectory, and in the next 3 years after that, realistically own the space. And as soon as they own the space, there is a lot more developer incentive to actually build out these applications, and so we're going to see a lot more higher quality kind of elements tie into it. And what personally impresses me about like how this ties into crypto is also the emergence of NFT gaming that we've seen. Like you and I were personally just at Denver a little while ago, and the quality of games that we were seeing, you didn't even know that there was any NFTs around that. And that was always a big take that I was personally kind of like espousing around in the world, saying that at any point, if you know that there's NFTs in the game, you've kind of you've done it wrong. The technology is kind of agnostic of what you should feel, like that you have true ownership of that piece of gear or item or character or whatever it is that you have. You should just feel like you own it. And then, the fact that it's an NFT and composable with the rest of the ecosystem is like a sideline feature, right? And so you're kind of seeing more emergence of metaverse stuff. You're seeing developer gaming around NFTs really start growing. And a good game takes like 5-6 years to develop. So I think those are going to come into like, a very nice, interesting use case in 3 years' time, 3 to 4 years' time, where, we've got really good NFT games. We've got really good Apple kind of use cases around, products. And then the thing that worries me about this, though, and I think this is something that's also worth mentioning, is that Apple hasn't really been the most favorable around NFTs in the ecosystem. They've been trying to put their Apple tax on the sales of NFTs, and that's been a debate that's been happening. We've known that there are certain wallets that have existed that aren't getting approval from the Apple App Store for Right now, we don't know too many reasons, but I'm sure that'll come out fairly soon. And we're also seeing that Apple holds a big stronghold on the developer ecosystem. And so Apple and Google Play stores is where all our mobile apps are going. A lot of development in the crypto ecosystem is also happening in the mobile space. I mean, 2 years ago, Web3 and mobile were like the worst pairing ever known to mankind. And now we have some use
Only the
cases.
second
Still not
worst
perfect.
now.
Yeah, it's like, they're no longer enemies and now they're frenemies. And then
Yeah.
they'll be friends and then they'll be best friends. And so we're seeing that grow as well. And so I think we're going to get to some exciting use cases in the near future, but I'm not expecting this to be a very short term, next week we'll have the best app experience ever. It's going to take probably 3 to 6 months. Sorry, 3 to 6 years.
Yeah, I think you're right. I think gaming could be the way in for Apple, and especially if this headset takes off. I was just going to pull this up. Apple's kind of been dabbling in crypto very secretively for a while. So this just came out this week. I'm sure you guys have seen it on your Twitter timeline. Very fun story that the Bitcoin white paper has actually been hidden in macOS if you're running the latest version of the software. It looks like this was discovered back in April of 2021, but somehow it's just going through the crypto verse now. It seems like everyone's talking about this. So some rogue developer put this in, or maybe, hell, who knows, maybe Apple wanted it in. And then I also found this article. This goes back to 2014, and I think there's newer articles. This is just the one I pulled up, though, that as of 2014, Apple was even looking at virtualized currencies. And I think there's been a lot more news since then that has come out that Apple's been sort of experimenting with digital assets, crypto, and how that could play into their ecosystem. I mean, an Apple stablecoin or an Apple coin would be something, huh?
We've been seeing a few job applications or job descriptions for applicants to apply at Apple that have cryptocurrencies named in them. So Apple is definitely looking at these sorts of technologies, and I don't think they're going to make any hasty moves. I mean, that's never been Apple's style. And I think that's naturally just an interesting time for the industry. It'll be quite credible if there is an Apple product that comes out. And the Bitcoin white paper thing is something that I also recently only found out about it. I went and found it on my Mac. So if there's anyone that has a Mac that's updated to the latest operating system, read that article. It'll be linked down below, and go and find the Bitcoin white paper on your Mac. It is just pretty cool. Apparently, this has been around since 2021, but I only recently found out about it.
Yeah, and here's an article referencing the job posts. I mean, they're a multi-trillion-dollar company. They have to be looking at everything. They're certainly looking at blockchain. Who knows how they view it? My hope is positively. Maybe this Bitcoin white paper situation corroborates that they have a positive outlook. Maybe not, but I think the future is bright, and I think it's possible that this AR VR headset is, what sparks an AR gaming revolution. And I think if you believe crypto is going to be a bigger part of gaming, then surely it'll take place there. And I think it's overall exciting. I'm very excited by this technology. I think it's going to have as much of an impact as the AI narrative that's been floating around. We just really haven't seen the hardware that's compelling yet, but that's Apple's bread and butter. So I will be a day one buyer. I know it's rumored to go for $3,000, which is going to be steep, but for me, this is something I want to try.
Yeah, and in terms of really awesome tech, I think it's all there, but the day that we get ledger level technology on your smartphone, whether it be Apple or Android, kind of signing transactions with your face, or whatever kind of biometric authentication that you have, and it be kind of like a native part of the operating system experience. I think that will be a really revolutionary moment and a watershed moment for just the user experience for Web3.
Apple, yeah. So I've thought about this a lot. Apple buying Ledger and integrating that tech as a small chip on the iPhone would be the most bullish thing ever. So if you ever see Apple buy Ledger or any of the other hardware wallet companies, that's your time to 10x long ETH and BTC maybe. But yeah, with that said, we've been going for about 30 minutes. I think that's all we had planned. Any closing notes, Chandler?
Yeah, it's my birthday, so I think everyone's obligated to like. You aren't obligated to comment, but I would really like you guys to comment if you can. And then what we'd be very keen to hear from everyone is if you would be down for us live streaming the withdrawals next week on the 12th or 13th. Either way, we'll send out a reminder about that on the Twitter. But this was a great episode. I'm glad we got to cover quite a few of the latest bits of news and also some non-crypto news that we naturally had to tie into crypto again.
Everything ties back. But yeah, thank you guys so much for watching. As Chandler said, a comment would be much appreciated. Let us know what we could do better. We're always looking to improve, and we've certainly taken suggestions and tried to implement them as best as we can. But yeah, with that said, apologies that this episode was late. We were on our offsite, but we'll be back to our regular schedule next week, and we hope to live stream next week as well. So thank you all so much for watching, and we will see you next time.